Today we're going to discuss business overhead insurance. I want to emphasize the word business and overhead. It is insurance for the business, not for the individual. It is insurance for the business. Also, it's overhead insurance. In other words, what does it cost us to actually run the business? So it's business overhead insurance. The other thing I want to emphasize here is that we are talking about disability. In previous lessons, you would have had a number of definitions of disability. Those definitions apply here as well. So please make sure that you understand the definitions of disability. Now, the overhead that we're talking about here is really in regards to business expenses. Now, again, I emphasize business expenses. So, for example, expenses like salaries, the employee's salary. Notice I said employees, not employer. In other words, the individual actually owns the business would have to have individual private insurance. This is really for the business, so it's for the employee's salaries. It will cover the rent, any utilities that are involved, any leases that are involved. In other words, what is the actual cost of doing the business itself? So, for example, if I say, well, outside of the owner, it costs us $10,000 a month to run this particular shop, well, then we can insure you for $10,000 a month. So please, I once again emphasize that it is really more not personal insurance, but it is for the business. The other thing to be aware of is that they will not cover any future debts. In other words, what they're really basically saying is that what is it that's costing you right now? So your leases, for example, any current debts that you may have, all those things are covered at this moment. However, if you incur future debt, it won't cover that. So we do have a limit. So basically, once again, we're looking at the past. We're not looking so much at the future. Now, in terms of overhead insurance, the coverage for payments really is really done on a basis that the employer, for example, would pay the actual payments, for example, your utilities and things of that nature there. However, what happens is that at the end of the month, the individual then will basically apply to the insurance company. In other words, they will file with the insurance company, and the insurance company will reimburse them for the actual expenditures. So it's not like an indemnity contract. It really is an reimbursement contract. So you pay your bills basically for the whole month. At the end of the month, you compile all your bills, you send it to the insurance company along with the claim form and everything, and then they basically send you a check. So it's what we call a reimbursement contract rather than an indemnity contract. Now, the next question really is that you understand is that this is really a two-party contract. In other words, it's not a third-party contract. It's really more of a two-party contract because it's a contract between the business owner, the business itself, and the insurer. So the policy owner really is the actual company itself, or the actual practice, the dental practice, the doctor's practice, law practice, whatever, is the actual owner. The insured is also the same person. That's why we call it basically personal insurance, a two-party contract. So the insured and really the policy owner are really one of the same, and it's also the beneficiary. Because remember, this is not life insurance, it's disability insurance. So as a result, the beneficiary is actually alive. So the company or the firm, whatever, is actually a policy owner, insured, and beneficiary, all basically rolled up in one. So there's no actual distinction here whatsoever. The other thing to note is that just like every other disability kind of policy, it has a benefit period. In other words, the benefit period could be 12 months, 24 months. What I've seen is maximum 36 months. Basically, by the end of 36 months, if the doctor's not back, the practice will probably be dead anyways, So therefore, the benefit period could be 12, 24, 36 months. It also has an elimination period. Once again, 30 days, 90 days, 160 days, whatever the situation may be, okay? Now, one thing that's very, very important to remember is that this product is a taxable product. In other words, the business owns the policy, therefore it is insurance on the business, so therefore it becomes a business expense. So therefore it's a deductible expense, but because it's deductible, that means that the benefit itself is also taxable.